Hi, this is James Shug with the end of day report from Westpac London on Wednesday, September the 28th. Actually, today's one of those days where it's really difficult to work out exactly when I should do this report because markets have been ebbing and flowing all throughout the session. I mean, we've seen European markets, for example, move between positive and negative territory, switch between the two at least 6 or 7 times so far today. And I'm having to do the report a little bit before the European close because of a commitment I've got tonight. There's been no big news today. We had EU Commission President Barroso say that Europe's going to work towards better cohesion going forward, and part of that is going to include probably the issuance of European-wide bonds, something that Germany is against. But apart from that, no fresh news out of Europe or out of Greece that has materially impacted on expectations about the sovereign debt crisis. We did have some inflation figures out of Germany, which were a little bit higher than expected though, which might feed into expectations about next week's European Central Bank meeting, where after much toing and froing, we've decided at Westpac that we probably won't see an interest rate cut as soon as that October meeting, although there will be a cut to come before too long. In the US, we had news on orders, durable goods orders. They were down very slightly because of a fall in the autos component after bouncing in July, but core capital goods orders were up 1.1%, which was their biggest rise in 3 months. And that actually initially gave US stock markets a bit of a boost. But even in the US, it's turned negative, then back to positive again. We've seen commodity stocks and healthcare stocks weigh against the US market. I think what it is that we've had some huge losses last week, some recovery in equities this week, and today with no really exciting fresh news, equities really just don't know what to do, and they're waiting, for example, the result of the German vote tomorrow on the expansion of the European Financial Stability Fund, and then of course news early next week when European finance ministers meet and decide about the sixth tranche worth €8 billion of the bailout payments to Greece. Greece needs that money if it's going to pay its bills that are coming due in mid-October. Related to that too, of course, we've got officials from the IMF, the ECB and European Commission heading down to Athens tomorrow to start their investigations into progress Greece is making towards budget deficit reduction. And that will then feed into the finance ministers meeting next week. So that's all happening, but there's no real fresh news related to that, and that's why markets are sort of don't know where to go today. As I speak, which is 5 to 4 London time in the afternoon, the Dow is unchanged at 11,191. The FTSE in London down 1.6%. The French market is down 1.6% as well, and the German market is down 1.3%. Most of those markets were up 1% earlier today, and they were down 1.5% earlier today as well. So this is by no means where they're going to close. We've still got another hour or so of European trading. In terms of commodity markets though, it's fairly clearly negative. Copper prices is down 3.4% today. Oil prices are down 1.5%. We're looking at $83.17 a barrel. And the gold price is down around 2/3 of a percent, at $1,642 an ounce. And the Aussie dollar, which was trading above 99 cents earlier on in the session, with equities coming off a bit, it's down a little bit too. It's at 98.9 US cents. No big Aussie news to watch for in the Australian session. So really it's a focus on international developments. One thing that we'll be looking for tomorrow is the Bureau of Labour Statistics in the US. They'll put out their preliminary estimate for the benchmark revision to the payrolls jobs series. This is basically will give us a feel for the extent to which the payrolls monthly jobs numbers might have overstated the true strength in the labour market in the year to March 2011. We think the overstatement in that year will be as much as 500,000 jobs. So that'll be another bit of evidence, if we're right, that'll confirm that the US economy has been in a weaker position, or has been performing more weakly than official data has had us believe until recently. So that's something to watch for tomorrow. And I'll report on that then. Okay, bye for now.